If you're in crypto, you definitely know the feeling. Your portfolio is way up and you start asking that million-dollar question, when do I sell? Now, the obvious answer seems simple, right? Just sell. But what if that's actually a trap? Today, we're going to dig into a strategy that the truly wealthy have been using for decades, a method that really separates short-term trading from long-term wealth building. So, let me ask you, what's your plan? Are you just sitting there waiting for some magic price target to hit so you can sell everything? I mean, for most people, that's the entire strategy. But what if there was a way to get your hands on that cash without ever hitting the sell button? Let's take a look at that other path. You know, when it comes down to it, there are really just these two paths. On one side, you've got the seller. They get their cash, sure, but that road ends with a big tax bill and basically a game over sign for that asset's future growth. But then on the other side, you've got the borrower. They also get cash, but their journey keeps going. Their asset is still in the game, still growing. The final destinations could not be more different. All right, so here's our game plan. First, we're going to break down the seller's trap. Then we'll uncover this whole different path, borrowing. After that, we'll dive right into the Wealth Builder's playbook, cover the super important risks you have to avoid, and finally, we'll look at the huge mindset difference between a trader and a true wealth builder. Okay, first up, this seller's trap. Why is it that the one move that seems the most logical, taking profits by selling, is so often the biggest mistake you can possibly make? Well, the second you hit that sell button, three things happen almost instantly. 1, the tax man shows up and takes a slice of your profit. 2, your asset is just gone. All of its potential for future growth, poof, vanished. And 3rd, you're left with that gut-wrenching feeling of seller's regret. And come on, we've all been there, right? Watching an asset absolutely moon right after we've cashed out. It's painful. So, if selling is a trap, what's the alternative? Well, that leads us right to this different path, borrowing. The whole idea here is to use your assets without actually losing them. And the key to this whole thing is something called a collateralized loan. The concept is actually really simple. You have an asset, you pledge it as security, like collateral, and a lender gives you cash. The absolute magic here is that you haven't sold a single thing. You've just unlocked the value of something you already own. Let's walk through how this actually works, because it's so straightforward. Imagine you have $10,000 worth of XRP. Instead of selling it, you go to a platform that offers these kinds of loans, and you borrow, let's say, 30% of its value. So you get $3,000 in cash that you can go use for whatever you want. And this is the most important part, you still own the original $10,000 worth of XRP. And this brings us to the crucial point, maybe the biggest advantage of this entire strategy right out of the gate. Taking out a loan is not a taxable event. See, you're not selling, you're not realizing a gain, so there's nothing to tax. You keep 100% of the cash you borrow instead of immediately giving a chunk of it away. Okay, so now let's see how this one tactic fits into a much bigger strategy. Welcome to the Wealth Builder's Playbook. This is all about making your assets actively work for you. I absolutely love this quote from the source material. It just perfectly captures the entire mindset. Your main asset, whether it's XRP, Bitcoin, whatever, is your golden goose. The goal isn't to sell it for one big meal. It's to keep it around so it can keep laying those golden eggs for you. So what do you do with that cash you just borrowed? You put it to work. Instead of just spending it, you use it to buy other assets that can generate their own income. Think about it. You could use a centralized platform like Nexo or a decentralized one like Aave to get that cash. Then you could use it to start an online business, buy some income-generating real estate, or invest in another project you really believe in. You're using your original asset to build a completely new stream of wealth. And this, right here, is the end goal. You've just created a wealth loop. Your original crypto is still sitting there, hopefully growing in value, and now you have a second asset, paid for by the loan, that's also growing and generating income. This is how compounding works in the real world. It's powerful stuff. Now, this strategy is incredibly powerful, but listen up, because it comes with a massive warning label. This brings us to the most critical part of this whole thing, the risks. You absolutely have to know how to play this game, or you can get completely wiped out. The guiding principle here is simple, and it's totally non-negotiable. Protect first, borrow second. Your number one goal, always, must be to protect your core asset. The borrowing part, that's just a tool, and it can be a really dangerous one if you're not disciplined. The single biggest risk is something called liquidation. If the value of your collateral, your XRP in this case, drops way too much, the lender can and absolutely will automatically sell it to pay back your loan. In that scenario, it's a catastrophe. You lose the cash you borrowed and you lose your original asset. It is a total loss. So how do you protect yourself from that? Well, it all comes down to managing your loan-to-value ratio, or LTV. Now, a platform might let you borrow a pretty risky 50%, but a much safer approach is to stick to the 20 to 30% range. This creates a huge safety buffer that can protect you from a nasty market drop and the threat of liquidation. Successfully navigating these risks takes more than just a tactic. It really requires a complete and total mindset shift. And this gets to the core difference between just being a trader and becoming a true wealth builder. This table just lays it out perfectly. On one side, you've got the trader. They're focused on short-term pumps, they're driven by hype and regret, their main tactic is selling for cash, and the outcome is temporary profit. But on the other side, you have the wealth builder. They're calm, they're focused on a long-term legacy, they use patience and discipline, and their tactic is borrowing for leverage. The potential outcome here isn't just a good trade, it's generational wealth. What it's really about is shifting your brain's reward system. You have to move away from chasing that quick dopamine hit of a successful trade and start moving toward the quiet satisfaction of building a solid, long-term financial foundation that can work for you for years and years to come. And that leaves us with one last question for you to think about. Is your crypto a lottery ticket you're just waiting to cash in, or is it the foundation for something much bigger? The way you answer that will define your entire financial journey. Thanks for joining this explainer.